Okay, in this video, we are going to discuss two important subjects. What is a tax loophole and how you can use a tax loophole to make visiting grandma tax deductible. In other words, an example, a scenario. Are you ready? Let's get started. Okay, what is a tax loophole? It's when you position yourself to legally reduce your taxes. Most taxpayers just take advantage of the tax savings, the tax benefits that comes along with everyday life. But really taking advantage of a tax loophole is when you position yourself to legally reduce your taxes. In order to position yourself, you want to do the following things before you receive your increased income or assets. And I'm speaking to Iraqi Dinar investors. You want to develop a written financial plan. You want to fully intend to invest and live off of your investments. You don't want to spend your basis or your foundation of your wealth, because if you do that, you're going to end up broke much sooner than later. Live well below your means. Pay off and lay off credit, except you do want to get a mileage credit card from one of the top airlines. That's because you want to spend every month and then you want to pay it off every month, and you want to accumulate thousands of miles so that you can travel for free. Don't worry if your credit is not good. You can put $5,000, $10,000 into a secured bank account, and they will give you a American Airlines credit card, or a United Airlines credit card, Delta, whatever. You want to invest in investments, not stuff. Now, that doesn't mean that you don't get to buy a new Mercedes. A Mercedes is an investment. That's your transportation for the next 10 years, 12 years, if you maintain the vehicle, even longer than that. Decide which charities you will give to. Now, this is crucial. And self-discipline, it should be on this list, although it's not, because you can add a space for relatives, because if they know you have dinars and it comes out on the news that dinars are doing this, or that, then they know you have money, and then all of a sudden they've got needs. Set aside, before any of this happens, lay out a plan for your charities that you can deduct legally with the IRS. These are real charitable organizations, and also the charities of your family and or friends. Get professional financial advice. I am not a financial advisor. I am a tax professional. I'm only sharing with you tips that I have seen my clients use over the years, and I myself have tried very, very hard to use. Okay, here's an example of making a visit to grandma tax deductible. We already know that a Schedule E is a gold mine for building wealth and lowering taxes. But did you know that a Schedule E can also enable you to write off your travel to different parts of the world? Have you ever asked yourself why famous people have 6 different homes around the world? This is grandma's house on the far left. This is a condominium that you can purchase in the downtown area very near to grandma's house. Now, when you go to see about your real estate that you're going to either rent on Airbnb or Booking or long-term, you decide how you want to rent it, the condo that you're going to purchase or the house or whatever. your mileage is tax deductible. See, this is a Schedule E. And see on line 6 where it says auto travel. And then it says see instructions. When you come over to the instructions for Schedule E, you can deduct ordinary and necessary auto and travel expenses related to your rental activities, including 50% of meal expenses incurred while traveling away from home. It's written in black and white, IRS tax code, tax instructions for Schedule E. So you see why a lot of people who are building wealth and who have money, they purchase real estate near a family member that they go to visit often. Because then you make visiting grandma tax deductible. Of course, you don't say that. You don't really tell IRS that. You just purchased investment rental property in a place that's closer than 20 miles or very close to where your mother lives, and the kids get to see grandmother. Although you cannot deduct your children's expense, you can deduct yours. It's all about positioning yourself to legally reduce your taxes. This is just one way of many.
Tired of owing taxes every year? Worried you aren't getting all your tax deductions? Learn how millions of freelancers and small business owners lower their taxes each year legally. It's easy. You just spend down your profits and increase your assets using depreciation. But wait, there are limitations and IRS tax codes. What if I told you there is an easy, fun class you can take online? You can do this. Enroll now on Udemy.